Hi guys, welcome to this Money Control live stream. You're watching IPO Watch with me, Nandita Khemka. Well, today, Rekha Rakesh Jhunjhunwala-backed Baazar style retails 835 crore rupees IPO has opened up for subscription. In fact, it's a combination of fresh issue as well as offer for sale. The company is raising 148 crore rupees via the fresh issue, and the rest will be raised via offer for sale. Now, we are joined by the company's MD, Shreyans Surana, to talk about the post-IPO roadmap. Shreyans, great to have you right here on Money Control. Congratulations on the IPO. You've raised as much as 250 crore rupees through the anchor book, and you've got some marquee names participating, right? You have Society General, you have HSBC Global Investment, Allianz Global, you have local names like HDFC Mutual Fund, White Oak, a whole host of domestic mutual funds as well participating. Congratulations. And how confident are you that the IPO will sail through?
Thank you so much. First of all, thank you for inviting me to your show. And I think, yeah, with God's blessing, we have got a very good anchor list. And as you rightly said, the lots of mutual fund and HSBC Global has also participated in this. I think the way we have grown in the last 6 years of company journey, since inception only, I think the IPO will sail easily, no issues, because we are giving good numbers.
Okay, so confident that it will sail through. Let's then get down to the specifics. You're raising 148 crore rupees through the fresh issue, and you will be using the funds to retire debt. Tell us, post the debt repayment, would you be debt free, and what would be the savings in terms of interest costs?
So post this primary round happens, we will be debt free as a company. For FY24, we have spent 13 crores on the interest cost. I think that will be the saving. So that entire thing get saved once for the entire year when the books will be debt free.
Okay, okay. So you will be a debt-free company post the IPO. In terms of your profitability, are you working with any target over the next couple of financial years, Shreyans? Could you lay down your profit targets for us?
So I will just tell you in this way that we started our journey around 13-14, and with 2 stores, we have grown at a CAGR of 55% in last 11 years to 162 stores. And in terms of revenue, in last 3 years, we have grown by 32%, and in last 6 years, we have grown by 26%. And the basic strategy that we follow is a cluster-based approach. We go deep in a state, so I think that's make it easier for the faster expansion, and we intend to do it in that way in future also. And in terms of profitability, if you see from FY23 to FY24, there's a multifold jump in the PAT because we are now getting the benefit of economies of scale, both at the gross margin level because of the private label and optimization of cost at the operational level. So both the efficiency is helping us to expand the margins. And I think that we intend to grow in the same manner that we have done in last 1.5 years.
So EBITDA margin wise, you have come very close to the 15% mark. It's seen a good improvement from 12% in FY22 to around 15% in FY24. What's the target here for the next couple of years, and what would be the margin levers going forward?
The margin lever, I can say so that the private label. So we have got 38% of the revenue coming from the private label, which is exclusively available in our stores, which is exclusively our brands, and which we will be intending to grow it further also. So in last 3 years, we have grown this at a CAGR of 64%. And the private label help us to play in designs. We have got 57 people team in sourcing, merchandising, and designing who works day and day out and creates those design in tier 2, tier 3, tier 4 cities. And we are getting a good traction. So gross margin expansion, the private label will be one of the key triggers for that portion. And at the bottom line, I think the operational efficiency is taking place because of the economies of scale that we have attained. And the intent, again, as I said, in last 6 years, we're going at 26%. Intent will be to keep the momentum. And if we are able to do that, I think the byproduct will be the profitability.
But your PAT margins are just around 2% or so, if I'm not mistaken. And any game plan to spruce that up as well on the profit margin
as I said, on the first we will be retiring the debt, and the entire interest cost will get added back to the PAT portion. So it will be one of the big levers. And apart from that, as I
Okay.
said, the gross margin expansion and the optimization of cost will be the additional levers to improve the profit further.
Okay, okay. Now let's move on to some other, parameters. Like you spoke about the store count as well. I think your total store count right now is 162. In just about 10 years. Now, yours is amongst the fastest growing retail companies. In fact, you have a strong presence in Eastern India as well, right? But in terms of expansion plans, tell us, do you want to expand in the same cities where you're present, or would you like to move out and in fact look at other geographies and move out of, not move out, but expand into other regions as well? What is your game plan when it comes to the expansion plans going forward?
So in terms of expansion, we will be continuing to following the same strategy of this cluster-based approach, and we would be intending to grow ourselves in the same geographies where we are present. Because I think there is a huge opportunity as of now
Hmm.
also in all these geographies. Right now we are in 9 states and across 146 cities, and we have just covered 14.6 million square feet, 14.6 lakh square feet of retail space. So I think there is ample room, and we would likely, we would like to grow in these clusters only. Maybe some extension of this cluster itself, so from central India to northeast, so that will be the area for the growth.
Okay. Going forward, just want to ask you about, where the spending is really coming from. Have you seen an uptick in spending in rural areas, specifically in tier 3 and tier 4 cities? Is that where the bulk of spending happening, or do you think that it's concentrated in metros only?
No, no, so it's a mix of everything, and I think the major part of growth is happening in tier two, tier three, tier four. So there are two, three levers to that. First thing is that
Hmm.
as the organized penetration is very less in tier two, tier three, tier four, and we as a organized retailer provide them with that experience. So in our store, if you see any of our stores now, it has all the premium feel that any metro city store would have. But along with that feel, we are giving them that variety and price because tier two, tier three are majorly festive driven market plus price conscious market, and because of our volume we are be able to give them those trends also, those prices also, and fashion article also. I think the combination of all the things is helping us to grow in tier 2, tier 3, tier 4. And apart from that, as we all know that if India needs to be 5 trillion economy in next 3 years, the major part of growth contribution is going to come
Hmm.
from tier 2, tier 3, tier 4.
Hmm. Right. I don't think I asked you this about your revenues. You are very near to that or very close to that 1000 crore rupee mark. You've seen a very good improvement in revenues, right? So by FY27, would you have any ballpark figure that you want to reach this target?
Sorry, I have a ballpark figure, but what I can say is that, as I said, like if we have grown, we have shown our growth rate in last 6 years at 26% in terms of career growth, revenue at revenue level. In last year, 32%, and our intent is to grow, maintain this thing for the future also.
Okay, in terms of future trajectory, have you identified any potential risks to the business? Because 87% of your revenues are coming from the eastern region. Do you think such a huge concentration in one region could actually pose a risk? What are your thoughts there?
I don't think so because what I believe is that it's better that you go region by region because it helps you to have achieved that economies of scale, which creates a great profitability. Because if you see in India, every state has a different taste, every state has a different festivals, and because we are concentrated into a particular states, it helps us to know the target catchment very well, know the assortment very well, and then we can plan very well, which is helping us to have that higher sales
Hmm.
that you are seeing along with the bottom line that we are creating.
Okay, and also, just a couple of more questions in terms of store count. Over the next 5 years, what would you hope to achieve? Because as I said, in 10 years, you have you have a store count of 162, which is remarkable. So over the next 5 years, what would you aim to achieve? Any vision there?
In 10 years, see, with the fund that we received, so we were blessed to have one of the marquee name, late Rakesh Jhunjhunwala ji, was one of the investors in the company, along with the DK Surana ji or KWL Kiran Clothing Limited, Haldiram Group owner Manohar Lal Agarwal ji, Bika ji, Ashwin Kedia of Alchemy Capital. So they, along with this big investors, they are that marquee name. who supported us. And now with the money flowing from even from the IPO perspective, from the primary thing, and the internal accruals that the company is going to generate, I think we will be able to achieve I cannot say the numbers because it's not mentioned in the RHP, but if you count it mathematically, yeah, so the growth will be very good in next 3 years.
Right. Last question really, promoters have paired stake via the offer for sale route. Could there be more such stake sales in future? And what about your, future fundraising plans? Would you be looking to raise more funds anytime in the near future?
No, as of now, I don't think so because the company is self-sustainable in terms of internal accrual going forward, the way I see. And in terms of selling shares, so promoters not selling that much also. Right now, also in the IPO, it's just 5.5% that the promoters are selling put together. It's majorly the OFS is from the investors and who have been part of this company for more than 7 years now. And none of the existing investors are also selling in complete, they are not selling full stake of their. Even after the post IPO late Rakesh ji's holding, which is transmitted to Rekha Jhunjhunwala ji, will be 3.9% in the company.
Hmm.
So that will be on the that OFS part.
Okay, with that, Shreyans, I would like to thank you for taking out time and joining in this afternoon. I would like to congratulate you on this IPO and wish you all the best for the listing. Hope to touch base with you once your stock lists as well. All the best.
Thank you so much. Thank you so much.
Thank you. Well, with that, we've come to the end of this edition of IPO Watch. Thanks a lot for tuning in, but you guys stay tuned to Money Control for all your other news and updates.